Hello, everyone. Hello, Wealth Warriors. And I am Tamar Hermes live here. Okay, now I am live for real because my computer was doing something crazy. Hello, Tamar Hermes here. For those who don't know me, I am the CEO of Wealth Warrior Women, guiding women to become financially free through real estate investing. And I have made a commitment to be live in my business page and in my Facebook group. So hello to all of the members of my Facebook group. I'm so excited that you are a part of the Wealth Warrior Women Accountability Tribe and that this is going to be your year to move the needle forward to where you want to be in your real estate investing and in your financial career, your financial world, your financial life. That's how I like to look at it. I like to look at our lives married with our finances, because we look at something like finances as bad, and it absolutely is not. It is not bad. So let's talk today about, is real estate investing risky? And how to avoid that, and also what's happening during COVID. I mean, do we not want to do this during COVID? So what I want to do is first break down the way real estate investing has been working for the past year during COVID. So real estate has been on fire. Sales are going crazy. People are making money hand over fist this year in real estate. It's been a very, very good year, which was surprising because we had a big dip in March when we first were confronted with the lockdowns and all of the parameters that were set upon us, but then everything really started moving. And there's a lot of reasons for that, which I'm not going to get into today, but just suffice to say that a lot of people are buying with interest rates very low right now, which is an incredible opportunity to buy. And also, with people working from home, they want more space. So they're moving to the suburbs, they're getting bigger houses, they're no longer being confined to have to go to an office space. So there's a lot of reasons why people are buying right now, which has really been creating this supply and demand situation. And what we're looking at now is the fact that the supply is very low and the demand is very high, which creates prices rising. Okay, so that's what we're looking at. So now when you ask, is real estate investing risky? Okay, so we know that a lot of people are doing it right now, which usually means that there's an opportunity there, right? Now, sometimes it can be so much like we're following the herd, which isn't necessarily great because a lot of people feel like we're due for a correction. But for right now, let's look at if it is risky, okay? So the way that I look at real estate, regardless if it's COVID, regardless of what the market is doing at any time, high, low, supply, demand, all of those factors which do weigh in to what you end up purchasing. But overall, real estate is only risky when you don't follow the rules. Okay, the rules being, one, understanding what price you're buying for, and if you can afford to cover the rents with mortgages and all the expenses and still be making money, or at least breaking even if you're going for an appreciation play. Okay, that's the first thing. So you need to make sure your numbers work. If your numbers don't work, yes, real estate's risky. I mean, if I just handed you $100,000 and said, let's see what happens, and didn't manage any of the numbers, that's pretty risky. But if you're looking at the numbers and you're looking at the deal and you're looking at the market and you understand where you're at, for example, I'm in Austin. So it's not that easy to cash flow in Austin, but it is easier to cash flow in San Antonio, which is really nearby us. So what a lot of people do is they'll buy a property for $200,000, say, and then if they can get the rents to $2,000, they're at a 1%, which pretty much will guarantee that they'll be able to cover all of their expenses. So is real estate risky in that sense? No. Now, the second thing you want to make sure is that you're buying in a market where there's people that rent. Now, I was looking at Chicago recently for some business reasons. And what I started to see was that a lot of people are leaving Chicago, right? They're leaving, which means what? Which means there's vacancies, which means there's no tenants. So you need to look at that because that is a factor. Would that be risky? Yes. So a lot of this, when we're talking about this, you're starting to see the patterns of what happens, which is that if you aren't paying attention to the risks, if you're not paying attention to the variables, things can get risky. Now notice, nothing that I've said so far has anything to do with COVID, right? COVID is definitely real and in our lives, but it really isn't a factor in terms of whether or not you buy. Whether or not you buy has to do with whether or not your numbers work, whether or not you have tenants. Those are things you're looking at. Those are strategies that you need to have in place. That's what makes it risky. Now, the other thing you need to pay attention to is the fact that you don't have liquid money when you invest in real estate. In other words, if I'm buying a $100,000 property and I put down 25%, that $25,000 is going into the property, and then I'm likely going to get a loan on the rest in a most conventional way. And so that $25,000 is invested in that property. If I decide tomorrow, oh my gosh, I need that $25,000, that's not a great situation. That makes real estate investing risky. Why? Because maybe I haven't left enough reserves for other things that I might need. And then if I need that money, I have to sell it at a loss because I haven't had time to have the property long enough. I'm just basically, if you go in and go out, you have to pay the realtors, you have to pay closing costs, you have to maybe have penalties on the loan. So there's all kinds of factors. Does that make it risky? Yes. That makes it risky because I've overextended myself. So what you want to do is you want to make sure that you're mitigating risks in real estate. You want to make sure that you're looking at the variables and that you're within your means, that you have reserves, that your numbers work. You have to be able to stay in a real estate investment for generally 3 to 10 years if you're going to buy and hold it. Now, there's a lot of other strategies. We can be flipping, we can be doing loans, we can be doing all kinds of things. Now, in those scenarios, there might be a lot shorter duration generally. So that is something that you might want to consider if you need your money right away. Now, this is the thing. Overall, if you're in the stock market right now, and you really believe in that traditional, give your money to the financial advisor and let them invest it for you, that's one strategy. Now, I have some issues with that because generally a lot of the financial advisors, they're making money regardless if you make money. They're charging you a percentage on whatever they invest. So you could be losing money and they're still making money. And by the time everything shakes down in the stock market, especially if it dips, you may not end up being in a position to get that money as liquid either. So if you needed that $25,000 and the stock market dipped dramatically, or you were in some kind of an investment that went down dramatically, you wouldn't be able to get that money either. So what I would say is, split the difference. You definitely want to be invested. I definitely do not think you need a financial strategist to invest your stocks. I think you can use the ETFs, you can use no load funds. There's lots of options that won't cost you anything, that'll make you a lot more money, that are solid. And you have to remember that if you're paying 2% to a mutual fund, you're going to be eating a lot of your profits because that tends to add up over time. So what you want to do is make sure that you are looking at the variables, that you're looking at your strategies, that you're looking at your numbers, you're looking at what the population's doing and the market's doing, and that you're mitigating your risk. Now, your risk tolerance will be different than mine, right? Because I may have more money in the bank. I might be able to put away a couple $100,000 and not have to worry about getting that money back. For you, and it's fine because we all start somewhere. We're all on a different scale of where we're at, right? So we don't have to be comparing our beginning to someone's middle or our middle to someone's 20 years. There's a lot of people that have much bigger estates than I do, and I have to know that I can't compare myself to that. I can aspire to that, but I don't want to be thinking, oh, they've done this and I've only done this, because I've been doing it on my journey, just like you've been doing it on your journey. And so what I really invite you to do is start looking at your opportunities. Now, I dial down all of this in my real estate investing course, in my Real Deal Formula Mastermind, and I'm going to be offering that course for sale at the end of this month. And I'm also going to be inviting clients into my mastermind. And so that's one way that you can go step by step and really learn all these processes and get everything done for yourself so that you can start investing. But everything I've told you, you can also do on your own. So what I've told you, it makes sense. And that's one thing I also want to impart to you, is that real estate investing makes sense. Everything I've said to you, there's no way that you don't comprehend. Like when I say, okay, if I buy something for $200,000 and I rent it for $2,000, I'm going to have enough to cover my expenses. That makes sense, right? And then there's all these other layers in terms of how many deductions you get and how much more money you actually make on a home like that, because there's a lot more advantages to owning real estate. There's a million, which is why it's critical that you start investing now. There's nobody that never says, I wish I would have bought more. I wish I would have bought more real estate, because real estate investing is really a gift. It really works. Now, I'm going to be talking more, actually, I'm going to be putting together a talk, I'll probably do it next week, where we'll talk a little bit about the Biden administration and about having a Democratic Senate and House of Representatives, and what that means for real estate investors, because there may be some rules that change, and that's okay. Again, it's just like COVID. It's just like having a Democratic government. It's all about navigating. So, and we're in a much energetically better space now, because we're getting rid of some toxicity in our government. So it'll help the world at large, and we can all be in a much better place. So the opportunities will continue to be there. There's also a lot of other opportunities that are coming down the pike in terms of people that might be starting to sell their properties. A lot of people during COVID haven't wanted to go out. They haven't wanted people to come in their homes. So they haven't sold their properties. They haven't put them on the market. That'll all start opening up once we're all vaccinated and COVID is behind us, for the most part, and people can start moving around more freely without worrying about their health. There'll be a lot more coming up on the market. So we have a lot to look forward to. And the main thing is to stay on top of all of this and to keep looking at your opportunities, and to realize when you hear somebody say to you, real estate investing is risky, one, I want you to look at how many properties do they actually have? Are they really investors, or are they just maybe did one bad deal and now they think it's risky, and that's what they're telling you? Because that happened to me. Even when I was doing well in real estate, people were telling me it was risky, and I was listening to them and being torn between what was actually working for me versus people that I thought were experts telling me otherwise. But I was listening to the wrong experts. I was listening to people that wanted to dip into my pocketbook and have me buy more stocks, not have me grow in real estate. And so that's why I'm such a stand for all of you to really start looking at what your opportunities are. There's no excuses, whether it's COVID, whether it's the risks in the marketplace. All of that is just part of our world. And what we need to do is look at the numbers, look at the strategies, look where people are moving, look where the deals are, pursue those, and start getting opportunities. You can get them for as low as $10,000. You can be buying properties. So there's so many opportunities. I can't wait to hear. Please post and let me know what you're doing, what you're interested in for this year, for 2021. We're just at the top of it. We're just starting out, and we have so much to look forward to. All of us do. And no matter where you're at. And the other thing is that I would love to hear if you're interested in the mastermind or in the course. Just pop me a note and say, I'm interested, or private message me, and that will work as well. I wish you a wonderful day, a wonderful rest of your week, and I look forward to next Thursday at 11 a.m. Central Standard Time here with Treasures with Tamar. I'm going to be coming in every week, and I really hope that you will take advantage of this and make yourself a part of it. Bye for now.
Thank you for watching. I hope you enjoyed this video. Like and subscribe below, and you can find out more at wealthwarriorwoman.com.